Why is Blue Owl Capital so important to the AI story right now, and who are they even?
Yeah, they kind of came out of nowhere last year, or 2024 rather, and started doing some of the biggest data center deals in the US, especially. Everything from OpenAI's Stargate project in Abilene to Meta's massive data center in Louisiana. And they were willing to invest billions of dollars in these projects, not as a lender, but by owning the equity in these kinds of special purpose vehicles that are being set up for data centers. And so, they're shelling out a lot of money and they're willing to take the riskiest part of these deals, which is the equity. So they're doing something a little bit different than the rest of the market, and they're doing it, with pretty substantial speed and size.
And kind of the part that is interesting about the Blue Owl story to me is that they are taking on a lot of the risk that the AI hyperscalers, the labs, companies like Meta, for example, are keeping off their balance sheet in some ways. And you see it reflected in the stock price of the AI companies. I mean, they're all doing quite well from the AI boom, and yet Blue Owl Capital, I mean, their shares are down something like 50% over the past year, and so I wonder where that leaves Blue Owl Capital. I mean, you talked to the CEO or the co-founder. I mean, what were the questions you had for him about this?
Yeah, I really wanted to understand the financial calculus. And it turns out that the kinds of investments they're doing in data centers is following a playbook that Blue Owl had already sort of established in other contexts before in its real estate business. So they were already, doing similar deals with Amazon, for instance, for Amazon distribution centers. And the way they structure them, they actually get regular payments on their equity. And in these data center deals, it's very, very hard for a tenant like Microsoft or Oracle to walk away before their 15-year lease is up. And so there are all these sort of mitigating factors that I understood better after the interview that, you know, make these equity investments a little bit less risky than they might seem on the surface.
And did that surprise you? Like, what surprised you about the conversation that you had with him?
Yeah, I mean, his bullishness, I think you can kind of get a sense of it from the earnings calls. But, he really, I think, sincerely believes that there's a huge arbitrage here, as, people in finance would say, that basically this is a once in a moment opportunity to basically lend money to these huge tech companies at above market returns. And I don't think I quite appreciated that until I talked to Mark. And also, yeah, just all the ways that they're kind of de-risking the investments. I don't think I quite appreciated until we sat down. That said, they are taking a bet on, that some riskier companies like Crusoe, Oracle, CoreWeave, that they're going to be around in over a decade to pay their bills and finish these projects. And if that doesn't happen, they'll be left sort of trying to find somebody to fill their place. So, um, you know, it's balancing those risks. And I think it was interesting to hear how Mark thought about that.
So after reporting this story and studying the data center financing story at large, I wonder if you left any more or less confident in the in the capacity for a company like Blue Owl to really stay the course, for all these data financiers to really come out on top. We've had people on the show talking about, well, there will be some pain in the short term, maybe, before things get better, and I think they have really been talking about the data center companies, the data center financiers, in and without actually pointing to them specifically. Did you come out more confident in the story?
Um, I think actually, since I started doing the story, you've probably only seen an increase in the number of players looking to do the kind of thing that Blue Owl is doing. And so there's now kind of increased competition for these really huge deals. And that's
So it's
probably why
harder. It's
H turns
harder.
down. Yeah.
Hmm. Okay. And so I guess you just, looking ahead here, what are the big questions that you have? What are the next, without telling us exactly, what are the trends that you're hoping to uncover on your beat in this story?
Yeah, I mean, I still think the debt markets are gonna be super key. Blue Owls had pretty good success, raising debt for these projects, and that's 80 or 90% of the costs on top of the equity. Um, as we've seen from some of these recent issuances, there seems to be a lot of appetite in the debt markets for anything tech and AI infrastructure. Spreads, as they call it, are pretty tight. I think things seem almost a little bit priced to perfection now in the bond market. And so I think a lot of people are sort of holding their breath and waiting for a bit of a reversal. Or if there's some story, some crack in the data center story that's going to make lenders a bit more nervous because ultimately, these people are concerned with not losing money. So I think maybe that's one underappreciated aspect, which is key to what Blue Owl is doing, is that they have to go out and raise all this debt on top of their equity. And so far, they've been pretty successful. But if there's a sign that the path is getting more difficult ahead, that could affect their appetite to keep investing this kind of equity.
Great. Well, Miles, I want to thank you for coming on. That is Miles Kruppa, our AI and finance reporter here at The Information.